Welcome to today's episode of The Future of Money. Today, I am joined by Ronak Daya, Head of Product at Paxos, one of the leading blockchain infrastructure platforms powering the future of finance. Ronak has been at the forefront of building stablecoin products that are changing how money moves, faster, cheaper, and with fewer intermediaries. Today, we'll dive into the real-world adoption of stablecoins, how they're reshaping global payments, what's holding the industry back, and what the future of programmable money might actually look like. Ronak, it's great to have you on.
Great to be here, Bert. Thanks so much for having me.
Absolutely. So maybe for the community and for the audience, it might be helpful to give a brief 30-second background on yourself.
I am currently the head of product at Paxos, and Paxos is a blockchain infrastructure company that partners with the largest enterprises in the world to enable them to participate in the crypto economy through crypto trading, stablecoin, and payments infrastructure. I've been here for 2 years. Prior to this, was at Coinbase, leading financing and lending products, and led Coinbase Prime platform. Prior to that, built small business banking at Square and led lending and capital products, and have worked in a bunch of different startups and in fintech and in ad tech space. And I currently live in New York, and I've been here for the last 15 or plus years.
So I was taking a look at Paxos and doing a bit of research on them. You guys are a heavy hitter. You've issued assets for the global dollar, PayPal USD, Lyft dollar, Pax Gold, and BUSD. Maybe if you could run us through what Paxos' core product vision is when it comes to stablecoins and tokenization. How do you think about balancing compliance, scalability, and innovation?
Yeah, for sure. Paxos was founded 10 plus years ago with the idea that most financial markets will move on chain, and adoption of this new technology will come from new crypto companies that are created and DeFi ecosystems that will get created, but also with existing financial players who will seamlessly adopt this technology in their background. And when they do so, they're going to need infrastructure that can partner with them and meet them where they are, operate in a regulated environment, and scale with their needs. And that's what Paxos is here to serve. Obviously, the vision of today more feels much closer than it ever was, but we've been at this for a little bit. We've evolved our thinking, but the core pillars of our strategy have always been around, one, tokenizing assets and bringing them on chain, and then two, providing a utility platform that helps drive adoption, utility, and value and usage of tokenized assets and other crypto assets. So on the tokenization side, we're one of the largest issuers of stablecoins, tokenized dollars. We have issued PYUSD for PayPal. We issued BUSD back in the day for Binance. We issued a USDL, which is a yield-bearing stablecoin. And most recently, our focus has been around global dollar and USDG, where we are the underlying issuer of the asset and help partner with some of the largest infrastructure and enterprise platforms like Anchorage, Kraken, Robinhood, OKX, and others to bring them into a shared ecosystem to drive adoption and growth of stablecoins. That's on the tokenization side. On stablecoins, we also have tokenized gold, and we have the largest tokenized gold product in Pax Gold, and have continued to explore other tokenization efforts that I'm happy to talk about. We couple that with a utility platform. So we have a qualified custodian and buy, hold, sell capabilities for crypto trading that we offer. So we power all crypto trading for PayPal, Venmo, IBKR, and others. And we have built a stablecoin payments platform that enables anyone to be able to leverage our assets or other assets for payments and money movement use cases, all in a unified platform that you can onboard and operate out of. The idea around this is that as more and more enterprises and businesses realize that they want to use blockchain-enabled infrastructure, especially stablecoins, that they need a unified platform offering that integrates an asset, custody and wallet infrastructure, trading, money movement capabilities, onboarding, compliance, and Paxos provides a unified hub to be able to get started and scale with your needs.
So it sounds like you have extensive enterprise relationships. I guess from more of a compliance and scalability perspective, how do you think about compliance, especially when you're dealing with tons of sensitive financial information? You mentioned Venmo and a couple of other big players. They have millions of customers that they share information with. How do you think about compliance in that sense?
How we build out our platform is flexible for different partners' needs. Some partners want to own the end-to-end customer relationship but still need to be able to leverage technology infrastructure solutions that enable them to do OFAC screening on any transaction that happens. And so we've partnered with a variety of different sort of service providers and built in-house compliance capabilities to be able to do that. As I mentioned, our long-term thesis that we've invested from the very beginning has been around creating regulated infrastructure. So we have a New York trust charter. We're regulated by the NYTFS. We have issuance capabilities that are regulated by the NYDFS in New York, MAS in Singapore, the AD, the FSRA in ADGM. And most recently, we also announced that USDG is MiCA compliant. We're able to be regulated by 4 or 5 of the largest sort of prudential regulators because we built a platform that can be flexible but scale to meet the ongoing compliance needs of these regulators, but also the enterprise clients that we have. So the platform is built in a way that can scale with the needs of the customer while offering them the flexibility to take parts of it and keep it in-house or lean on us to operate and manage all of it.
You mentioned MiCA compliance. We've seen recently in the market that a lot of crypto projects that want to expand overseas, or at least outside the US, especially in the EU, even in Asia, compliance has become one of the main focus points for almost all of these projects, especially since there's more clarity in the US, at least around what the crypto ecosystem and markets will look like. I'm actually really glad you mentioned that compliance first perspective that Paxos is taking. I'd like to echo that Zebec is also doing the same sentiment when it comes to compliance and making sure that expansion, especially outside the US, meets those standards. So we actually last month acquired a company called GateKnox. They're a KYC, AML, identity verification Web3 platform. It allows us to offer end-to-end compliance directly within our ecosystem. So this can go anywhere from onboarding and verification to, say, transaction monitoring. And especially when you have stablecoins built into a platform like ours, which is a payroll platform, it's especially important that these enterprises understand that we're basically just complying with all regulatory standards. So it makes a lot of sense that Paxos shares the same sentiment and takes the same approach, especially when dealing with these large enterprise clients.
That's awesome. I'd love to learn more about it. I think from our perspective, we're seeing compliance and privacy both be front and center, especially for enterprise customers that come to the table. It depends on the size and scale of the operation that you manage and the geographic coverage and the oversight that you have in your existing products. But if stablecoins and crypto infrastructure are going to become the underpinning of how money moves and replace existing financial rails, that's going to have to be front and center.
No, I completely agree. So maybe expanding more onto this topic of enterprise clients exploring stablecoins, what do you think is driving this interest, and what's the next step in seeing broader adoption across Web2 companies?
Yeah, I think it's a few different things. One, I would say that if you look back at the arc over the last 18 months or so, I think we've been building up to the space and to this moment in time. Obviously, we've seen early adoption and demand for USDT and USDC in existing markets. But I think what we saw around 18 months ago was one of the largest global brands come to the table and issue their own stablecoin in PayPal. We obviously powered with them to issue a regulated stablecoin that's regulated out of NYDFS. But the fact that someone like PayPal decided to create their own stablecoin and offer it and integrate it into their core money movement sort of flows was something that would have been really hard to do and imagine 18 months ago when the regulatory climate and the political climate was completely different. But that started to awaken and make the broader enterprise ecosystem start to at least consider and think about, well, if PayPal is creating their own stablecoin and leveraging stablecoin infrastructure in their core platform, maybe this isn't all like speculative, which is a lot of what crypto gets bad rap for, and that there's actual like use cases that we need to be paying attention to. At the same time, we've seen Stripe then go out and make acquisition of Bridge. And then obviously over the last 6 months, there's been a big wave of regulatory changes and Circle going public, etc., which have all sort of continued to build up the narrative of stablecoins. What we have seen up to date is that the large part of stablecoin volume is still driven primarily by trading and money movement. People are using it for on and off ramps. But over the last few years, we've seen increasing number of startups come to the table that are building on stablecoin native and Rails. So instead of starting to build on banking as service platforms, we're seeing companies come and start creating new infrastructure on top of stablecoins. This trend has started because there's clear value and demand for dollars in the global south and in certain markets where regulatory existing currency poses as challenges. And so we've seen one, demand for dollars drive it, two, crypto trading and adoption have created sort of supply of stable coins. And as you have supply and some early demand of dollars, that creates the necessary conditions for people to start building products that not only enable you to move in and out and on and off ramp into stable coins, but to start creating the necessary infrastructure to start leveraging for real payments and money movement use cases. Combine that with the fact that there's a broader narrative in the market on how stable coins are the necessary infrastructure to move money across the world at scale. And you see all these news cycles that we're starting to see that enables and brings a lot more developers and infrastructure providers that then further accelerates the speed at which end-to-end solutions can build out. All of that has led to some real use cases and real demand. And then that creates the necessary pressure for any enterprise that is out there to start at least stop ignoring it and start thinking about how you can leverage this new rail and what problems do you have today that could be solved using this infrastructure. Fortunately for us, for Paxos, we've been at this for a little bit. We help bring PayPal stablecoin to the market, but we also power all of their crypto infrastructure. And we built out stablecoin payments and money movement capabilities. So today we're partnering with some of the largest enterprises to take them through the stablecoin journey. They typically start from, is this real? What does it have for me? What use cases are you seeing? And then how does it apply to what I'm doing today? And how do I get started? And over the last few months, we've seen that journey shrink and go from like the 12 months it typically used to take to in a matter of weeks.
There are a few things you mentioned that I'd like to address. So one, you said stablecoins used to be more of a speculative product, especially when it came out. I think USDC was in 2018. Between 2018 and 2021, I'd say there was a lot of speculation around it. There wasn't a lot of promising utility, at least from the community perspective. But in today's world, what we're seeing now is that not only is there more widespread adoption, but now there's enterprise clients, payroll providers, governments that are having conversations about stablecoins, and they're recognizing the benefits of stablecoins, whether it's faster settlement, reduced fees, and greater transparency. I completely agree with what you said. We're seeing that same momentum on our end, and I do think this is still the beginning of stablecoins. I think it has a lot farther to go. The second thing you mentioned was one of the biggest use cases for stablecoin was the on and off ramps. We could not agree more. One of our products is our card product. So being able to off-ramp crypto is one of the problems that we try to solve. And the biggest off-ramp that we've seen is from stablecoins. So not only does it serve as the primary payout method for cross-border payments, it's also the primary payout method for payroll. So not only do employees want their checks faster, they don't want it in just US dollars. That's typically ACH to their bank account. Now they want it in USDC or stablecoins. So we're seeing a huge shift towards stablecoin payroll, which is something we're trying to pioneer and partner with enterprise clients on. And then the last thing you mentioned is that stablecoins are a necessary infrastructure to move money across the world. I could not agree more on this as well. I think stablecoins have facilitated an easier solution to cross-border payments. Instead of going to like a Western Union and paying a 10% fee to send money to, say, Argentina, now you can just send it instantly at a fraction of the cost, if any cost at all, through a stablecoin. So no, I completely agree that stablecoins are the next big thing. And I really do think the utility around it is what makes it so attractive for the everyday user, for enterprise clients, for governments, just everyone and anyone in general.
Yeah, I touched on a lot of the journey of how sort of the stablecoin momentum has come up. But I think with the necessary sort of infrastructure in place, we're just going to see an increased wave of use cases. The most obvious ones are where money sits idle. Today, when people look at existing fintech apps, things work, but things work because there's a large level of abstraction, and stablecoins help sort of actually get to the bare metal of it and solve the problem in the right way by leveraging blockchain infrastructure. So we'll just increasingly see more integration into existing financial rails and net new apps be created as the cost and speed to get started continues to go down.
Nope, that makes complete sense. So you mentioned the USDG, which is the US global dollar. So let's talk about that for a minute. What is it and how is that different from other stablecoin ecosystem?
Yeah, for sure. So when we launched the PayPal stablecoin partnership with them, it was very clear that most companies are going to want a version of their own stablecoin. The reason for that is that today, when you leverage existing other stablecoins that have adoption in the market, you are relying on an asset that is not currently like regulated in most markets. You're not getting any of the economic benefits or control. And in most cases, you're likely enabling a competitor because we know that 65% of economics of USDCs goes into Coinbase, as we've seen in the S1. It was very clear that most exchanges, enterprises, and others are going to need a stable coin that they can help drive adoption of and get compensated for it. But the world also doesn't necessarily need hundreds of different stable coins that all have fragmented liquidity. The stable coins are networks at the end of the day, and the value proposition that any stablecoin has is in the availability, access, and liquidity that they're able to leverage in the market to be able to create the connectivity that enables you to get the benefits of moving your dollars on the blockchain. And so I have always focused on creating regulated assets that give the largest enterprises protection and peace of mind to feel comfortable that the dollars is always going to be worth the dollar, that there is backstops and protection in place for such that they can have the trust and confidence to put their own corporate money or hold their customers' money, because at the end of the day, they're passing some of that trust down to their customers. If they're going to put their name and brand and association with it, they need to have full confidence in it. And then if they're the ones driving adoption and distribution, that they get compensated for it. So we took that and created Global Dollar, which is USDG, that leverages the Global Dollar Network, which is an open network that anyone can join to be able to provide economics and bring the largest set of ecosystem partners to the table to work together to drive adoption of the stablecoin. So USDG is the asset. It's a one-to-one backed stablecoin that is issued out of Singapore and compliant with the upcoming MAS framework. Most recently, it's also now fully compliant in Europe and MiCA, and today has adoption and is available on Ethereum, Solana, Inc., and coming on more blockchains. The unique value proposition of this is that it is backed and adoption of it is driven by the Global Dollar Network. The Global Dollar Network is an open network that any enterprise can join. You get compensated for the value that you bring to the table. So unlike other stablecoins, we take 100% of the economics that are generated out of the stablecoin and pass it to the enterprises that are helping drive usage and adoption of the asset for things like holding, minting, accepting, etc. So for those of your audience that might not know how stablecoin economics typically work, is that when you mint or buy a stablecoin, you're taking $1 and putting it on the blockchain. Someone's holding that dollar in the background in reserves. If it is a fully regulated or a fully sort of backed stablecoin, they're holding one-for-one reserves into a dollar and investing it into sort of treasuries. That treasury generates yield in the current environment. That's 4.2 or 4.3% of interest rate. And most existing stablecoins call that revenue and pocket all of that money. Global Dollar Network takes all of that revenue and passes it to the distributors to help drive adoption and growth and compensate any enterprise and any business to now get all the benefits of having your own stablecoin, but being able to leverage the benefit of the network and the distribution of the network to grow the asset and see utility of it.
So it sounds like it's more community focused in order to drive adoption long term.
It's focused on a network and leads. So our existing Global Dollar Network has 50 odd partners who all have millions of users who have a reach of over 60 million customers. We partner with Kraken, who has launched rewards programs, has integrated into their exchange. Their new CrackPay app fully runs on USDG. We partner with Anchorage, who's integrated this into their core flows. We recently launched with OKX, who's doing the same thing. And every sort of business essentially needs to pick what stablecoin they're going to use for their ecosystem and flows. And we're working on making sure that USDG is that asset because it gives them the benefit of the network while giving them the economics that they can't get anywhere else.
So I was taking a look at the website earlier. There's a section on the USDG page that says earn when you accept. There are incentives for inbound USDG deposits and payments on your platform. How exactly does that payment network work?
Yeah, so we've set this up in a way where we enable option and distribution of the asset. Typically, you are holding the asset or you're driving payment and acceptance. If you are a business that is leveraging the stablecoin USDG in any way, you should join the USDG and Global Dollar Network. What we do is we build a proprietary system that enables us to attribute and track movement of USDG stablecoin across the different sort of partners that are here and as a part of the network. And we use that to attribute that value and pay out proportional rewards for that distribution that is being created by the network partners for USDG, the asset.
So what we've noticed is that in many stablecoin ecosystems, the missing link is utility at scale. So not just minting and redeeming, but integrating into financial workflows. Sounds like Paxos with the Global Dollar Network has solved this issue that other stablecoin ecosystems might have.
I'd say solved it as a byproduct of partnering with some of the largest players who have existing workflows and adoption of stablecoins that they're rapidly sort of replacing or integrating USDG into. And then two, they're creating net new flows and on-ramp capabilities and connectivity that they're making sure that USDG is front and center to that. So solve may be an overkill, but we're absolutely in the process of solving it with some of the largest enterprises in the world.
That's great to hear. I mean, better safe than sorry, right? So how do you see stablecoins reshaping the core payments infrastructure, whether it's B2B payments, cross-border transfers, or merchant settlements?
Yeah, I mean, I think we're starting to see hints of how this is going to work already today. I think when you are moving money, and let's stick to the B2B use cases as a starting point because there's clear pain points there. Today, if you're a business, you are typically relying on suppliers and vendors across the world, or you have customers or users across the world that you need to pay out. Your payout mechanisms today are driven by leveraging sort of a variety of different solution providers that inherently are using correspondent banking rails and holding pre-funded balances in various hops to be able to deliver money. So if I want to pay out 1,000 different contractors or suppliers for my business, I am making those payments leveraging some system that charges me a decent amount of money and takes 6 to 7 days to settle. And a lot of the cost associated with that movement comes from the various set of intermediaries that are involved in the flow, plus the pre-funding requirements to make sure that when I actually move the money, that it can settle, because moving each hop takes a while. And more often than not, people are taking counterparty risk and settling ahead of time by holding pre-funded balances. And those pre-funded balances have a cost of capital. All of that results looking fast, but that speed, even if I said 6 to 7 days, now there are options where I can pay like 2% or 4% or maybe higher to be able to move money more quickly. And that happens because of the system that I just described. And when you add that up to paying thousands of merchants and paying thousands of sort of counterparties and millions and billions of dollars on an ongoing basis, it adds up to significant costs. Stablecoins can eventually replace that end-to-end flow. As there is demand and supply available of stablecoins, there's less of a need to sort of off-ramp. But today, what they're able to do is they at least solve the 6 to 7 hops that I described. Instead of doing pre-funded balances and having sort of stablecoins go from one correspondent bank to the other, they can move from sort of the point of origin to destination. They still need to be off-ramp because today they still need to take your US dollars and convert them into stable coins. And at the receiving destination, you still need to take your stable coin and convert it into local currency. But that's where we are today. As supply and infrastructure continues to increase, we're starting to see receiving counterparties starting to hold more of those assets and start to expend it using a stablecoin-backed credit card or keep it as a savings account because the receiving country's currency is not set up. So over a period of time, even those sort of costs in the first and the last mile will go away. But the necessary conditions for stablecoins to be leveraged for B2B payment use cases are already there today. And we're starting to see a large wave of use cases, both from one to many, many to one payments and payouts already come to life. As an example, we power crypto payments for someone like Stripe. And so today, if you're a Stripe merchant, and you go on your dashboard, you accept stablecoin payments, that's Paxos in the background. Would we partnered with them in the background is to be able to have their US merchants accept stablecoin based payments. They can do that from anywhere in the world. And that then gets settled into fiat dollars, just like any other payment method. What that enables these merchants to do is now be able to accept payments from 90 different countries, all with one single click of a button, and get it settled in fiat dollars. Increasingly, we're going to start to see those merchants now wanting to hold stablecoin balances as opposed to get settled in fiat. And that'll create more necessary conditions for them to be able to spend and leverage stablecoins as a payment method and make it more ubiquitous to traditional money that we see today.
So I'd like to revisit the example you used at the beginning. So you use the example of a contractor that's when they get paid, it takes 6 to 7 days to settle. The process is extremely slow because you have intermediaries in the mix. However, you can pay a 4 or 5% fee to make the process move faster. Now, this resonates with us just because the two main issues we try to solve are eliminating settlement times and fees. That's the premise of our real-time payroll solution. So it's interesting you mentioned that. We've seen that in this generation of employees, the younger generation, whether it's my generation or maybe millennials, they want to get paid as fast as possible. The waiting game is just not an option for them anymore. And if we look at the way the payroll system has been structured the past 7 years, it hasn't changed one bit. So even with all this innovation that we've had in payments over the last 50, 60, 70 years, the payroll system is the same as it's always been. You get paid every 2 weeks, you get paid a check, and that's that. There hasn't been any sort of revolutionary solution that's been able to solve or eliminate this problem. So what we've realized is using stable coins eliminates both problems in one. So there are no settlement times and there are no fees. We can completely eliminate that in this instance. Instead of waiting 2 weeks for an employee to get paid, the employee can get paid at any day of the week, whatever they've accrued at any point in time, which we believe is more financially flexible and it gives an employee a healthier financial situation. So we think stablecoins from a cultural standpoint also plays a huge role in the payroll market. And that's one of the key areas of focus we've been working hard on.
That makes sense. There's a reason that payroll and payments work the way they do because it's hard to move money instantly in real time and do so in small batches that are proportional to the compensation that they deserve on a daily basis or weekly basis or hourly basis. But blockchain technology enables you to be able to solve all of these problems in a new, unique way. The programmability layer that comes on top of stablecoins is not one that we've touched on extensively in this conversation, but that's the other piece that often gets overlooked. Now with stablecoins, you can do things that you couldn't do before. And we're just barely scratching the surface. One of the things that we've done in pioneering and bringing a yield-bearing stablecoin to the market, which is not available to US customers, is instead of having to save traditional savings account, you're holding money on an ongoing basis and you still get paid your interest in most cases. And you get paid on a monthly basis. There's no reason that shouldn't be paid out daily and should be paid out. And there's no reason that shouldn't be available to anyone in the world. So we built a rebasing token that pays out daily programmatic yield to any customers that are outside of the US that hold the stablecoin, proportional to the holdings that they have, and they get paid a 4.5% interest rate for as little as $1 that they hold in their self-custodial wallet. And that's again just an example of the programmability of stablecoins that we're leveraging to bring new innovations. We're just starting to, with the rise of AI and commerce moving at the speed of light and sort of progressing and becoming more programmable, there's going to need to be a programmable dollar. And I'm excited to see all the new standards that are being developed around stablecoins and how those two worlds come together.
Yeah, it's definitely exciting to say the least. All right, so Ronak, again, appreciate you taking the time. Just one last question before we leave you to it. You've had a rare vantage point, having built products in both traditional finance and Web3. What lessons from TradFi do you think Web3 still needs to learn to reach mass adoption?
When new companies get created in the space, oftentimes it is looked as a arbitrage on regulation and risk management, which is not how the ecosystem is going to grow. I think if you're going to replace financial rails, you've got to understand why some of the controls and risk management procedures and regulation exist. They're largely there to protect consumers, and how you integrate some of those values into how blockchain-enabled payments and money movement work is going to be required at all parts of the system if we're going to be able to replace it. It doesn't have to be done the same way, but it doesn't mean that you don't do it. And so I think the more quickly we learn that and can use sort of the learnings from the past to build things in a newer, faster, better, cheaper way, the more innovative the solutions and the faster the adoption will get.
Ronak, thank you for taking the time to join our episode today. It was great learning more about you as well as what Paxos has done with the US Global Dollar Network.
Thank you for having me. It was great being able to discuss all of this with you and excited to see where the industry goes from here.
Absolutely. We hope to have you on in the future again.
Thank you.